Warren Edward Buffett, the legendary value investor, turned an ailing textile mill into a financial engine that powered what would become the world's most successful holding company. Known as the Oracle of Omaha for his investment prowess, Buffett has amassed a personal fortune of over $130 billion, according to Forbes. He inspires legions of loyal fans to make a yearly trek to Omaha, Neb, for an opportunity to hear him speak at Berkshire's annual meeting, an event ironically dubbed Woodstock for capitalists. Early life and education. Buffett was born to Howard and Leela Buffett on August 30, 1930 at Omaha, Neb. He was the second of 3 children and the only boy. His father was a stockbroker and 4-term U.S. congressman. Howard Buffett served non-consecutive terms on the Republican ticket but espoused libertarian views. Making money was an early interest for Warren, who sold soft drinks and had a paper route. When he was 14 years old, he invested the earnings from these endeavors in 40 acres of land, which he then rented for a profit. At his father's urging, he applied to the University of Pennsylvania and was accepted at age 16. Buffett left that university after 2 years, transferring to the University of Nebraska. Upon graduation, his father once again convinced him of the value of education, encouraging him to pursue a graduate degree. Harvard rejected Buffett, but Columbia University accepted him. Buffett studied under Benjamin Graham, the father of value investing, and his time at Columbia set the stage for a storied career, albeit one with a slow start. Upon graduation, Graham refused to hire Buffett, even suggesting that he avoid a career on Wall Street. The reason was that Graham himself had been rejected by Wall Street firms, which he believed was because he was Jewish. Thus, Graham made it a policy only to hire Jews for his Wall Street company. Buffett returned to Omaha to work at his father's brokerage firm. He married Susan Thompson in 1952, and they started a family. After 3 years, Graham had a change of heart and offered Buffett a job in New York. Able accomplishments. Once in New York, Buffett had the chance to build on the investing theories he had learned from Graham at Columbia. Value investing, according to Graham, involved seeking stocks that were selling at an extraordinary discount to the value of the underlying assets, which he called the intrinsic value. Buffett internalized the concept but had an interest in taking it a step further. In 1956, he returned to Omaha, launched Buffett Associates, and later purchased a house. In 1962, he was 30 years old and already a millionaire when he joined forces with Charlie Munger, whom he first met in 1959. Their collaboration eventually resulted in the development of an investment philosophy based on Buffett's idea of looking at value investing as something more than an attempt to wring the last few dollars out of dying businesses. Along the way, the pair purchased Berkshire Hathaway BRK, a dying textile mill. What began as a classic Graham-style value play became a longer-term investment where the business showed some signs of life. Cash flows from the textile business were used to fund other investments. Eventually, the original business was eclipsed by the other holdings. In 1985, Buffett shut down the textile business but continued to use the name, eventually growing Berkshire Hathaway into a multi-billion-dollar holding company. How Buffett grew Berkshire Hathaway. When Buffett first bought shares in Berkshire Hathaway in 1962, the struggling textile firm was facing low-cost competition that threatened to push it under. Entranced by the stock's low cost compared to its book value and net working capital, he purchased a controlling interest in 1965. Shares were trading around $8 when Buffett bought the stock, rising to almost $20 in the late 1960s when he became CEO. As of July 2024, shares in Berkshire Hathaway Class S stock traded at more than $620,000. Buffett used the textile company's profits to buy other companies, including the life insurance firm National Indemnity. The useful thing about life insurance companies, Buffett found, is the float, the capital available after premiums have been paid, but before claims are paid out. Buffett could use this float to invest further, buying securities and other businesses that could generate more money to be invested in more firms and more shares. He closed his investment partnerships by 1969, offering Berkshire Hathaway shares instead of cash, and bought insurance companies as wholly owned subsidiaries under the Berkshire umbrella. He bought See's Candy in 1972, a purchase that generated more cash flow for investing. He also invested in American Express, Bank of America, Coca-Cola, and Apple, among many others, focusing on solid brands and businesses with a secure economic moat. Buffett bought for the long haul, preferring to buy and hold his investments, which tended to terrifically appreciate over time. He chooses firms with innovative, shareholder-focused management and high profit margins, seeking solid fundamentals when they're available at a discount. Buffett closed the last Berkshire Hathaway textile mill in 1985, growing the company steadily as a conglomerate instead. As of July 2024, Berkshire Hathaway owns more than 65 companies outright with a market cap of more than $896 billion. Wealth and philanthropy. If you're Warren Buffett, you give it away. Buffett stunned the world in June 2006 when he announced the donation of the vast majority of his wealth to the Bill and Melinda Gates Foundation, which focuses on world health concerns, U.S. libraries, and global schools, among other issues. It is one of the world's largest transparent charities. Buffett's donations will come in the form of Class B shares of Berkshire Hathaway stock. His total donation to the Gates Foundation is 10 million shares. It will be given out in 5% increments until Buffett's death or until the foundation fails to meet the spending stipulation or the stipulation that either Bill or Melinda Gates remains actively involved in the foundation's activities. Buffett's 2006 donation was 500,000 shares, valued at approximately $1.5 billion. In June 2022, the foundation's CEO, Mark Sussman, sent an email to the employees of the Bill and Melinda Gates Foundation. The email was also shared on the foundation's website that Buffett's contributions since 2006 have totaled more than $36 billion. The Wall Street Journal reported that his 2024 donation of 9,930,357 shares of Berkshire Hathaway stock amounted to $4 billion. Berkshire Hathaway. Press release. June 28, 2024. Buffett expects stock price appreciation to increase that amount over time. While the enormous size of the donation to the Gates Foundation was certainly a big surprise, Buffett's charitable endeavors are nothing new. He'd been giving money away for 40 years through the Buffett Foundation, eventually renamed the Susan Thompson Buffett Foundation, which has one purpose. It offers college scholarships to low-income students in Nebraska. Buffett always planned to give the bulk of his wealth to charity, but initially insisted that that would occur posthumously. The change of heart is quintessential Buffett, rational, decisive, maverick, and blazing a path all his own. "I know what I want to do, and it makes sense to get going," he famously said upon making the change. Buffett's investing strategy. Buffett's investment philosophy is based on the principle of acquiring stock in what he believes are well-managed, undervalued companies. When he makes a purchase, he intends to hold the securities indefinitely. Coca-Cola, American Express, and Costco all met his criteria and have remained in Berkshire Hathaway's portfolio for many years. In many cases, he purchased the companies outright, continuing to let their management teams handle the day-to-day business. A few of the better-known firms that fit into this category include See's Candies, Fruit of the Loom, Dairy Queen, the Pampered Chef. Buffett's mystique remained intact until technology stocks became popular. As a resolute technophobe, Buffett sat out the incredible run-up in technology stocks during the late 1990s. Sticking to his guns and refusing to invest in companies that didn't meet his mandate, Buffett earned the scorn of Wall Street experts and was written off by many as a man whose time had passed. The tech wreck that occurred when the dot-com bubble burst bankrupted many of those experts. Buffett's profits doubled. Conclusion. Warren Buffett's journey from a young entrepreneur to a legendary investor exemplifies the power of disciplined, value-oriented investing and strategic philanthropy. By transforming Berkshire Hathaway from a struggling textile mill into a multi-billion-dollar conglomerate, Buffett demonstrated a remarkable ability to identify and cultivate long-term value. His commitment to investing in well-managed, undervalued companies and holding them indefinitely has led to immense financial success. Additionally, Buffett's substantial philanthropic efforts, including his landmark donations to the Bill and Melinda Gates Foundation, highlight his dedication to giving back and making a positive impact on global issues. His approach to investing and charity embodies a unique blend of rationality, foresight, and generosity. Don't forget to like, share, subscribe, and drop a comment below to let us know what you think.